Good afternoon, guys. Andrew Schartenberg here, your friendly neighborhood mortgage engineer. Today is Wednesday, January 5th. It's about 1:30 in the afternoon, and we're here with your daily rate report and homebuyer tip of the day. Today we actually saw rates go up just a tick from where we were yesterday afternoon. So on conventional Fannie Mae and Freddie Mac 30-year fixed loans, best case scenarios, you are going to be at 4.875, whereas yesterday you were around 4.75. On FHA and VA government loans, again, best case scenario, 30-year fixed loans, you're going to be looking at about 4.75. So we're still obviously under the conventional loans on FHA today. I think some of this has to do in large part to a stronger than expected economic report which came out from actually the payroll company ADP regarding employment, and I think that's really kind of affecting the bond trading today because there's really not much else to look at. Secondly, the minutes of the FOMC, Federal Open Market Committee meeting really kind of digested yesterday and then this morning, and I think what bond traders are taking away from that is that the quantitative easing 2, if you've been following news headlines, that's QE2, the Fed's program to buy government debt. A lot of analysts were expecting that they would be purchasing more than $600 billion of securities, and it appears that they're going to be only purchasing just the $600 billion, and I think that's made some bond traders a little skittish. So again, any large volatility in rates this week, I think we may see on Friday, depending on the employment report coming out, and hopefully it comes out for mortgage rates more on the negative side than the positive side. It's definitely a mixed bag. My feeling is that it's really not going to be a big positive, and I think that hopefully we'll see some lower rates going into next week. Now on to the home buyer tip of the day, guys. It's regarding taxes. Tax time's coming up. We're obviously about to get our W-2s for most of you W-2 employees out there. And if you just bought a home for the first time, your mortgage professional, your realtor, someone probably told you that you're going to be able to now claim the mortgage interest tax deduction. That means that the mortgage interest you pay throughout the year, which is a substantial amount most of the time, is deductible on your taxes, so you're going to be getting a lot more back this year and every year going forward. Also, if you just bought the home this year, you're going to be able to deduct a portion of the closing costs that you paid as well. So this year's deduction will be extra large. What it really effectively does is owning a home allows you to pay more on a monthly basis for your mortgage than you would in a similar rental property because you'll be getting some tax savings for that. And the moral of the story is that you want to talk to a CPA, a Certified Public Accountant. The reason that I say that is there's a lot of firms out there such as H&R Block and tax preparation firms that do a phenomenal job. But in my opinion, you can get the same and better service from someone that's highly qualified in a CPA for about the same price. You should talk to your mortgage professionals, talk to your real estate agents. We all deal with many CPAs and can give you a great referral. They're really going to be able to help you with tax preparation and planning, and they're happy to do so. And it's not going to cost you much more money than it would doing it yourself or using a tax preparation firm. Again, nothing against a tax preparation firm, but I feel that you get a higher quality of service from a CPA. So that's the tip of the day, folks. If you ever want to reach me, you can get me at andrew@otfunding.com. That's my email. Again, andrew@otfunding.com. Look forward to talking to you tomorrow, and have a nice day.